If you want to understand why a 100,000-point Dow Jones is a warning and not a win, you have to look at a single year, 1971. That was the year the world changed forever, and most people did not even notice until their bank accounts started leaking. Before 1971, the United States dollar was backed by gold. There was a physical, tangible limit to how much money the government could print. Because of that limit, the value of your labor stayed consistent with the value of the products you produced. As workers became more efficient and technology improved, their wages rose in lockstep with their productivity. For decades, the American dream was a simple mathematical reality. Work hard, create value, and your purchasing power will grow. But on August 15th, 1971, President Richard Nixon changed the rules of the game. He ended the gold standard and allowed the dollar to become a pure fiat currency. It became a piece of paper backed by nothing but a promise from a government that was already deep in debt. From that exact moment, a massive gap opened up between the elite class and the average worker. Productivity continued to skyrocket thanks to the digital revolution, but real wages remained almost completely flat for the next 50 years. Where did all that missing wealth go? It did not disappear into thin air. It was siphoned directly into the stock market through a process of systemic devaluation. When you hear that the Dow Jones is heading toward 100,000 points, you are not looking at a booming economy. You are looking at the tombstone of the American middle class. According to data from the website WTF Happened in 1971, which tracks hundreds of economic metrics, the cost of living began to move exponentially away from median income, the moment we abandoned hard money. In 1970, the average home in America cost around $24,000, and the Dow Jones was under 1,000 points. Today, as the Dow flirts with 50,000 and eyes 100,000, the median home price has crossed $400,000. We are told to celebrate the stock market hitting record highs, but nobody mentions that it now takes twice as many labor hours for a young couple to buy a basic starter home compared to their parents. The Dow Jones is not a measure of national success. It is a measure of how much the yardstick has shrunk. When the ruler you use to measure wealth is made of melting ice, the objects you measure will always look like they are growing. A 100,000-point Dow is simply proof that your time, your sweat, and your energy are being devalued at an accelerating rate to keep a broken system from collapsing under its own weight. There is a fundamental rule in economics that explains why the rich seem to get richer during a crisis while you struggle to pay for eggs, and it is called the Cantillon Effect. Named after Richard Cantillon, an 18th century banker, it describes a devastatingly simple truth. Money is not neutral. When the central bank prints a new $1 trillion, that money does not enter the economy evenly. It does not fall from the sky like rain on everyone's garden at the same time. It enters through a very specific, guarded door. The big commercial banks, the primary dealers, and the mega corporations that make up the Dow Jones 30. Look at it like this. If you are standing directly under a water hose in a desert, you get to drink the fresh, clean water first. You fill your buckets, you water your lush green lawn, and you buy up all the surrounding land at today's low prices. By the time that water trickles down to the people at the edge of the desert, it is just a few drops of mud mixed with the dust. The people at the center of the system get to spend the new money before it has caused prices to rise. By the time that money reaches your paycheck in the form of a small cost of living adjustment, the price of the goods you need to buy has already adjusted upward to account for the new money in the system. You are always the last to receive the money and the first to pay the higher prices. This is exactly how the stock market is pumped toward 100,000 points. When the Federal Reserve engages in what they call quantitative easing, they are essentially handing out fresh liquidity to the VIP lounge of the financial system. These insiders use that fresh, high-value currency to buy up assets like stocks and real estate. This pushes asset prices higher, which makes the wealthy feel richer. According to a study by the National Bureau of Economic Research, the top 1% of American households own over 50% of all stocks. When the Dow Jones hits 100,000, it is a massive transfer of purchasing power to those who were able to buy in before the inflation hit. For the rest of us, it is just a signal that the cost of entry into the middle class has become even more impossible. The system is not broken. It is working exactly as it was designed to work, to reward the owners of assets and punish the providers of labor. If you want to know why American products do not seem to last as long as they used to, or why air travel has become a nightmare of crumbling infrastructure and cutting corners, Look no further than the stock market. For the last 4 decades, corporate America has been infected by a practice called stock buybacks. This is a legal form of market manipulation, where a company takes its extra cash, or even takes out a massive loan, to buy its own shares off the open market and then destroy them. This reduces the total number of shares available, which automatically makes the remaining shares more valuable and increases the earnings per share metric, without the company actually selling more products or being more efficient. Before 1982, stock buybacks were largely illegal because they were seen as a form of stock price manipulation. But under the Reagan administration, the Securities and Exchange Commission passed Rule 10b-18, which gave companies a safe harbor to pump their own stocks. Since then, the floodgates have opened. According to data from S&P Global, American companies have spent over $7 trillion on stock buybacks in the last 10 years alone. Think about the opportunity cost of that $7 trillion. It could have been used to build new factories in the United States. It could have been used for genuine research and development to create the next generation of technology. It could have been used to raise worker wages and improve product quality. Instead, that wealth was burned to artificially inflate stock prices and trigger massive bonuses for executives whose compensation is tied to share performance. This is financial engineering at its worst. We are hollowing out our greatest companies from the inside to make the charts go up. It is like a person selling their own internal organs to buy a more expensive suit. You look great at the party, but you are dying on the inside. When you hear about the Dow hitting 100,000, you need to ask how much of that growth is real innovation and how much is just accountants moving numbers around to trick the market. We have replaced the engineer with the hedge fund manager, and the result is a stock market that is mooning while our infrastructure is crumbling and our products are becoming disposable garbage. The 100,000-point Dow is a monument to a corporate culture that has forgotten how to build for the future and is now only interested in harvesting the present. In a healthy economy, the stock market is a place where you go to invest in companies that make things people need. In our modern world, the stock market has become the thing itself. We are living through the financialization of everything. This is a process where every aspect of human life is turned into a ticker symbol that can be traded, leveraged, and manipulated. It started with stocks and bonds, but it has moved into housing, healthcare, and even basic infrastructure like water and energy. The most devastating example of this is the housing market. For 80 years, a house was a place where a family lived, built a community, and slowly grew their personal wealth. Today, houses are being bought up by multi-billion-dollar private equity firms like Blackstone and bundled into real estate investment trusts that are traded on the stock market. According to reports from MetLife Investment Management, institutional investors could own 40% of all single-family rental homes in the United States by 2030. When the stock market is pumped by the Federal Reserve, these firms have an endless supply of cheap capital to outbid you for that starter home in the suburbs. They do not care about the price because they are not looking for a home. They are looking for a yield. The 100,000-point Dow is fueled by this predatory behavior. The wealth of the nation is being concentrated into the hands of a few massive index funds like BlackRock and Vanguard, which now own significant portions of almost every company in the Dow Jones 30. This concentration of ownership means that the stock market no longer reflects a diverse and healthy economy. It reflects a top-heavy system where a few major players own everything and everyone else is a permanent renter in their own country. We are moving toward a world where you will own nothing, but the stock market will be at an all-time high. If the Dow Jones hits 100,000, while the homeownership rate for the youth is at a record low, did the country actually get richer, or did it just get more efficient at harvesting the life force of its own citizens? This is not growth. This is the liquidation of the American dream. The United States is currently carrying a national debt of over $36 trillion. To give you an idea of how astronomical that number is, if you sat down right now and started counting $1 every second, it would take you more than 1.1 million years to reach 36 trillion. This debt is not just a number on a government website. It is an anchor tied to the neck of every citizen. The government is now trapped in a suicide pact with the financial markets. They cannot afford for the stock market to crash, or even to stay flat for a long period, because a crash would trigger a massive recession. A recession means lower tax revenues, which would make it impossible to pay the interest on that $36 trillion mountain of debt. Currently, the interest payments alone on the national debt are costing American taxpayers over $1 trillion per year. According to data from the Treasury Department, we are now spending more on interest than we do on our entire national defense budget. This is the definition of a debt trap. To keep the system from collapsing, the government needs the stock market to keep going up. They need the capital gains taxes from a booming Dow Jones to fund the interest on the old debt. It is a giant Ponzi scheme where new money must be constantly printed to pay off the interest on the old money. This desperate need for high stock prices has created what economists call a zombie economy. According to analysis from Bloomberg, nearly 20% of major publicly traded companies are technically zombies. This means they do not generate enough profit to even cover the interest on their own corporate debt. They only stay alive because the Federal Reserve keeps interest rates artificially low, and the credit markets keep providing them with fresh loans to pay off their old ones. If the Dow hits 100,000, it will not be because these companies are healthy or productive. It will be because the system was forced to keep them on life support to prevent a total collapse of the credit market. We are sacrificing the long-term stability of our currency to keep dead companies walking. A record-breaking Dow is the mask that a dying economy wears to look healthy at the party. To see the true state of the economy, we have to stop measuring things in dollars and start measuring them in labor hours. Dollars are a moving target. They can be printed, devalued, and manipulated. But human time is the only truly scarce resource in the universe. Everyone has the same 24 hours in a day, and you only have a limited number of days in your life. This is the only honest way to measure wealth. If you look at the price of the Dow Jones versus the median hourly wage, the picture becomes terrifying. In the 1960s, the average American worker had to work approximately 40 hours to pay the monthly mortgage on a median home. Today, despite all our technological advancements, our high-speed internet, and the fact that the Dow Jones is thousands of % higher, that same worker has to work over 80 hours to afford that same basic home. We have become twice as productive, yet we have to work twice as hard to stay in the same place. When the Dow Jones hits 100,000, this gap will only widen. If the stock market doubles, but the cost of housing, healthcare, and education triples, you have not won. You have been liquidated. You are becoming poorer in real terms, while being told you are becoming richer in nominal terms. The system is designed to keep you on a hedonic treadmill, working longer and harder just to maintain a stationary position. The wealth generated by your hard work and your productivity is being siphoned off through the inflation of financial assets. A 100,000-point Dow is a monument to this systemic theft. It represents the trillions of hours of human life that have been converted into digital digits on a screen for the benefit of the top 10%. If you want to know if the economy is winning, stop looking at the Dow Jones and start looking at how many hours you have to work to buy a gallon of milk or a tank of gas. That is the only metric that matters. And it is the one metric the elites want you to ignore because it exposes the truth behind their rigged scoreboard. The rest of the world is not blind to the game being played in Washington and on Wall Street. They see the $36 trillion in debt, the endless money printing, and the way the United States financial system is used as a geopolitical weapon. For the last 80 years, the world has used the United States dollar as the global reserve currency. This allowed America to live far beyond its means. We could print paper and exchange it for real goods, like oil from the Middle East, electronics from Japan, and cars from Germany. It was the greatest privilege in human history, but that privilege is rapidly coming to an end. Nations like China, Russia, India, and Brazil are increasingly looking for ways to bypass the dollar in international trade. This is known as de-dollarization, and it is the single biggest threat to the American standard of living. According to the World Gold Council, central banks around the globe are hoarding gold at the fastest pace in 50 years. They are not doing this because they like shiny metal. They are doing it because they are preparing for a world where the dollar is no longer the king of the mountain. For decades, the dollar was backed by oil, the so-called petrodollar system. But now, even Saudi Arabia is starting to accept other currencies for its black gold. If the Dow hits 100,000 because the government is printing money to stay ahead of its debt, the global demand for the dollar will eventually collapse. When those trillions of dollars currently held in foreign banks come rushing back to American shores because nobody wants them anymore, we will experience a level of inflation that will make 2022 look like a paradise. We could face a scenario where the Dow is at an all-time high in nominal terms, but the shelves in the stores are empty, and the price of a gallon of gasoline is $20. This is the fate of every empire in history, that tried to print its way to prosperity. Their stock markets went to the moon right before their societies fell into the ocean. A 100,000-point Dow is not a sign of American strength. It is a sign that the rest of the world is losing faith in our currency, and we are being forced to pump our own market to maintain the illusion of power. In a healthy, functioning economy, the stock market acts like a compass. It tells society where capital should flow to create the most value for the most people. When companies are innovative and efficient, their stock goes up. When they fail to provide value, their stock goes down. But today, that compass is completely broken. The needle is being moved by massive magnets held by the Federal Reserve and the political elite. We are sailing into a global economic storm with a navigation system that has been intentionally rigged to always point north, even as we are drifting toward the rocks of a major debt crisis. The promise of a 100,000-point Dow Jones is the ultimate gaslighting of the American public. It is designed to keep you focused on a digital scoreboard that has zero connection to your daily reality. It keeps the population arguing about which political team is better, while the fundamental structure of our future is being dismantled for parts behind the scenes. To survive what is coming, you have to stop being a passive spectator in their game. You have to understand that the higher the stock market goes without a corresponding increase in real, tangible productivity, the more violent and painful the eventual correction will be. A win in the 21st century is not about the number of digits in your brokerage account. It is about how much of your own time and energy you actually control. It is about having the resilience to withstand a system built on a foundation of debt and broken promises. When the Dow Jones finally hits that magic six-figure number, the fireworks will be bright, and the media will be screaming with patriotic joy. But while everyone else is cheering, you should be looking for the exit. Real wealth is found in the ownership of real assets, the possession of tangible skills that the world needs, and the deep knowledge of how the game is truly played. The 100,000-point Dow is not a victory lap. It is the final gasp of a financial system that has run out of road and is now trying to fly. Do not be fooled by the glitter on the surface. Look at the rot in the foundation. The game is rigged, the house always wins, and it is time for you to stop playing by their rules and start building your own path to freedom.